high yield?
Oh, high yield's been a fantastically volatile asset class over the last couple of years. You've got the combination of widening credit spreads, inflationary pressure, and a Fed policy cycle that's been, frankly, disastrous for most fixed income asset classes. But the good thing about high yield, it's had a relatively low default rate. That may change in the near term. We're not quite sure yet. But for investors, it's actually had reasonable returns. The key thing actually has been not so much credit over the last few years, but duration and interest rate risk. And I think our strategy in particular, where we've had more flexibility to manage that, has been one of the key differentiating factors we've had over the last few years. Yeah, the strategy evolution is really, I'd say it's not been an evolution, it's been a locked-in part of the strategy since its launch, and that's been floating rate rather than fixed. So our interest rate duration risk is structurally very, very low, typically 0.1 or 0.2 of a year. And that's been a fantastic feature to preserve capital as the Fed hiking cycle has come through. But of course, being able to get a floating rate coupon as well, which is a key part of the strategy, has also been an advantage as rates have gone up. So those two things combined, plus a slightly more defensive credit stance during COVID, during the inflationary pressures we saw last year, has also come good relative to a lot of other fixed high yield strategies that we've seen out there. I mean, as in the short term, it's a fantastic opportunity to drink free champagne and stoke an already huge ego. But more seriously, for the rest of the team, it's a fantastic validation of all their hard work, and hopefully for the clients, also an indication that we've done a good job for them.